Good morning, traders. It is Monday, the 20th of March, 2017. It's 8:02 a.m. Chicago time, 9:02 Eastern. Thanks for joining me here for another Trader Bite and welcome to a new week. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance overall is defensive this morning. Crude oil is down 1.36%, down 67 cents at 48.64 on the May contract. Remember, crude oil is trading May 2017 currently. The next weakest product is the Russell, down 0.32% or 4.5 points. The strengths today in gold. April gold's trading $1,232, up $1.7, followed by the Euro FX, the 10-year Treasury, and the U.S. Treasury bond. So you can see defense is on the rise. However, it's really, really minuscule. I mean, the bonds are up 2 ticks or something. It's tiny. Uh, so overall, the market's on a in a holding pattern and is lower. The S&P minis, which I'm using as the index to represent the majority of the key stocks in the U.S. Um, that's lower as well. It's down 4 points, trading at 23.71 quarter. The close of last week in the ES is 23.74.75, and so we are overall just sideways to lower in the morning here. As far as news, um, nothing really to talk about. Chinese home prices are climbing again, up 0.3% nationally. And then other than that, there really isn't all that much that I need to mention here. Some stuff going on with the G20, some changes that are likely to be in the news, but overall, not too much to chat about. Since it's Monday, I'd like to cover the weekly calendar. Just run through the key figures. Let's start out with today. Today, the expectation is for a quiet morning. There's not much on deck. We've already had a couple of Fed speakers talking this morning. At 12:45 Eastern, we get ECB Speaker Weidemann, who's a hawk, and at 1:10 p.m. Eastern, we get Fed Speaker Evans. Remember, the U.S. is on daylight saving time for an additional week before Europe catches up. Europe is expected to switch to daylight saving this coming Sunday. So the difference between New York and London is currently just 4 hours instead of the usual 5. So just bear that in mind as you hear about the times here. Um, from the East Coast time. So 1:10 p.m. Fed Speaker Evans. Other than that, there's really nothing on the calendar today worth mentioning. Tomorrow, we get a few numbers out of the UK, PSMB, PPI, CPI, RPI. We get US current account, and we have Fed's Dudley George Mester speaking Wednesday. The Eurozone current account, the US FHFA housing price index, and existing home sales for Wednesday. Our key Thursday, there's a lot going on. The Eurozone consumer confidence, UK retail sales, US jobless claims, new home sales, ECB, TLTRO, and bulletin. And then we get speakers who are ECB's Lautenschlager, Fed's Kashkari, Kaplan, and then we also have Fed Chair Yellen speaking on Thursday. Friday, we get German and Eurozone manufacturing and services PMIs, and then the U.S. has durable goods and manufacturing PMI. We also get Fed's Evans and Bullard. So you can see that the ECB and our central bank, the Fed here, are busy this week talking. As far as what we expected for last week, let's take a look here. On Friday, the key plan was that we did break higher on Wednesday. On the FOMC, we had a pullback day on Thursday. I did expect the 87.75 to be broken on Thursday, but the market did not have any oomph. And so it rested and it went sideways on the close. The primary hypothesis on Friday was for the market to drop towards 76, 75, 77 to form a base and then start to move up towards that 87.75. That did not happen. So this is a non-starter here. On the other hand, the secondary hypothesis was expecting a test higher. Oops, a test higher right here on that LVN right there at 82, 82 quarter, and then the expectation is for it to rotate down to the VPOC at 76.75, and then I was expecting 74 as a key test in the afternoon. The extended target would have been 68, the MC point of control in this area. Didn't quite get there, but what we did do is we did push down into that 74 initially. So let's take a look at what happened here just to recap. This is Friday right here. We went and tested 80.75. Remember, 82 was the key figure. Didn't quite push high enough to give a nice short signal. The first chance at a short was down here, but even then, it was an open auction against the prior day's point of control, made it difficult to put on something good as far as the short side at the mid and VWAP against the prior day's close and hold on. It was just a very choppy trade on Friday. Remember, Friday was quad witching, and now we're trading the next contract. We're on June, and volume returns to normal starting today. But Friday was very choppy as expected. It formed a channel down. Oops, that wasn't supposed to be a circle. Doop. Like that. It formed a channel down. You could see that the low initially 73.75. Remember, our goal on Hypo 2 was to open and chop, push up to 82, and then have a hard time getting back up to 82, then continue lower to 74, and that's where I ended where I ended the hypo. I was just simply looking for that, and then beyond that, a push down to 69 for the MC point of control. But overall, it hits the 73.75, and then we get this nice impulsive move up to 82.25. It pushes through the LVN by a tick. Oops, that's a sloping line. It pushes through the LVN by a tick. And then it just drops off. This did not make much sense to me. Again, the market does not need to comply with any of my desires or plans. It does not need to make sense. However, it did give us a nice opportunity to get short off of this impulsive move down. This rotation down had 7.5 points on it with a 2.75 point pullback. So this pullback, the short on the pullback would have been good against where it stopped there, the mid for the session, all the way up to 79 even. 79 even would still have been good. And then the goal is to take out the 74.75, and it did that at the end of the session. Overall, the profile is Gaussian, very balanced against a profile that's also balanced, although double distribution. And now we're trading against 23.71 and a quarter, which was below. Not sure why these guys are down here. These opening swing lines. That's odd. So there's your opening swing. But overall, it finished weak on Friday, and then we're continuing the weakness by pushing lower. We went to 68.75, 69 is the MC point of control. So that's the story based on Friday versus our expectations. One thing I want to show you here is I use this chart. This is my flex level chart. I use this chart to set the levels that are broadcast off my servers. For anybody that's got IRT, you can pull these as flex levels. It's an indicator, an RTX indicator that you can pull up. And I want to show you how the individual profiles, let me change the color here to black. The individual profiles, the individual MCs. So that's an MC, that's an MC, that's an MC. These are micro composites. These are basically um, profiles that are encompassing a range of days to see, and the rules are for this, and these are my rules. This is something I invented just to be able to see what the auction is doing within a certain set of days. And the MC is really trying to find out, the goal for the MC is to find out what is happening in volume, or where the market's executing volume when days overlap. So I draw an MC whenever you have an overlap of days, you'll get an MC. So right there is an MC. Not able to draw very well with the mouse, but you could see that the Wednesday we've been trading inside of the FOMC for 2 days, Thursday and Friday, so that gets an MC. And the more balanced or the more prominent the point of control is on an MC, the more likely you're going to the more likely it is that you'll have a move away from that MC. And so what you see here is the overall picture. This outside MC is basically taking everything from the gap up on the 21st all the way through Friday, so we could see where the market has accepted prices. So the protruding areas are called high volume nodes, and the highest protruding area is the point of control. And that's what we mark the point of control. It's very important. It basically says here's where the market traded the most. The market's purpose is to facilitate trade, and so this area becomes an area that gets visited and revisited generally. And so that's why I keep track of it. But you could see how these small MCs translate into these high volume nodes, right? So these MCs start to accumulate and make up this big MC. And so so far what we've done is we've gapped up. We've gapped up again right here. We had this big gap that we closed, and then we started this downtrend. We broke to the high side, and then we continued to trend down. So we had an inside day, and then we continued to trend down. So we tested this sloping trend line from above with this last Tuesday's price action. Last Tuesday it opened on the high side, went all the way down to the trend line, and finished higher, up at 2363.75 or so, or 62.75 or so. And then we had the FOMC right here. And what we've done for the last 2 days is trade just inside of the FOMC. So you need to see what the big picture is. This although on the daily, the FOMC clearly breached the downtrend, it breached the downtrend again. And then what we've done is we've resumed this downtrend with these lower highs. So what this is doing versus what we were doing before is every time we push higher, we start to read one time frame lower. We start to put in lower highs on a daily basis. Again, these bars are not all session bars, they're pit session bars only. So they are reflecting what has happened during the stock market open, or the futures pit session, which is 9:30 to 4:15 Eastern daylight time, or Eastern time. Doesn't matter if it's daylight or not. So what this is saying is the market is trending down. It's one time framing down. Every time there's a break, we start to one time frame down. It's showing weakness. Now, let's contrast that with what we've done for the week. So as we look at the weekly profile, so these are weekly profiles here. So here, again, for those of you who have been watching a while, We went into this one time framing thing for a while. These are weekly profiles, and then we broke it a little bit late January. It looked like it was going to break the pattern, but then it finished up high. So a lot of strength. Then the next week we went into one-time framing up again, accelerating to the upside, accelerating to the upside, moving up to the upside. I warned during this week here and this week to be cautious. If you're short, we get a huge breakup, and then we end the one-time framing up by breaching this low here, and then we're resuming it again last week. So what we have is this swing back and forth, back and forth. What we've had is a nice long run of one-time framing up on the weekly, which got stopped 2 weeks ago. Last week resumed it, but on a daily, we're getting an opposite signal. On the daily, we're being told that the market is weak in the shorter time frame. So in the day time frame, it's weak. In the week time frame, it is neutral to strong, neutral to bullish, and what you have there is an overall dissonance in the way the market participants are acting. And so we're likely to sit here for a bit longer as we start to accumulate some volume and then set up for the next move, which is likely to continue higher because the trend is your friend, as the cliche goes. So overall, the market's not seeming ready to want to start pushing lower. Now, to look at the weekly or the overnight, real quick as we finish our review here. The overnight has done nothing but put in a box profile below. It opened slightly lower to where it closed Friday and has just gone sideways through the Asian as well as the European sessions, and is holding right around the point of control. The overnight profile is completely useless. The volume overall is 100K on the overnight session, which is much lower than the 140K. Again, the rollover has ended, so that all that volume is gone. There's no need to keep rolling your contracts, so that volume is gone. And now we're back to true volume, but it's still very light. So what this is showing is very little participation in the overnight session, and the profile itself is saying, hey, we have no incentive to move out of here currently. So the overnight profile is not giving us is not providing any input or any help at all. Uh, the last 3 days have been on top of each other. Again, FOMC, and then Thursday was it opened higher and it went lower, and then Friday it opened higher and then attempted to go higher and has gone lower yet again. So what we have over the last 3 days is a pretty prominent point of control, which is at the 76, at the 2376 even above, and I expect this to provide some resistance on the way up as we trade up into it. So this morning, my expectation is, because we are below the prior 2 days, my expectation is an open auction. I expect it to be a lazy trade, and then I'm looking for responsive buying, which is likely to be resisted in the 73, 74 area. And then I'm looking for resistance at 76 and a quarter before this continues lower and discovers lower as it has over the last two sessions. And my expectations is it's, the Newtonian laws of motion. An object will keep moving in the direction um, that it's in unless it's acted upon, and I'm kind of applying that. I'm, formerly an engineer, so I look at things that way. I look at things in terms of energy dissipation, things like that. That's what volume is to me. It's just units of energy. Um, and so with no other input, all I can expect is for the market to continue to close lower into the end of the session. And so that's what Hypo 1 is. Hypo 1 is an expected test above and then a rotation down. Do not expect a lot of range today. I'm expecting about 8 or 9 points of range this morning. It is Monday. It is the slowest day of the week traditionally or statistically, so I'm not expecting too much. Now, if we do an open auction and we test lower first and find our base down here in the 68, the former 68 point of control, and start to put in a higher low here and become responsive, that I'm looking for resistance right against the 74 area. If you recall from last week, 74 was a key figure, and then a push to 76 overall. Again, that's expected to give us about 7 to 8 points of range. That would be hypo 2. So how do I use this information? Look, I've covered that a lot of times. How do you take this theoretical hypothesis stuff and turn it into trades? This is not academia. This is trading. The goal here is to come up with what the market is expected to do. There are 5 hypotheses on any given day. This could break into an open drive down on a trend day, then expect 62 and then 59 below it, and so on and so forth. There are many things that can happen. The goal here is to look at the most likely play and then to start stalking your order flow or indicators, oscillators, whatever you use to enter or time the market, then look to trade in the direction of your plan. So, as I said, if I see it dropping early and then forming a base and is unable to continue its drop, then I know to lean on something long. But I also have my targets, right, for my hypothesis. My targets will be 74 and 76 and a quarter for hypo 2. That's why we have these hypos, so that when it's time to act, you're not sitting here going, where could it go? What should I do? Oh my God, and you start to do too much thinking. And that is a huge, that's what most people's demons are. Whether it's my prop traders, whether it's the traders at stage 5 that I watch, risk 4 day in, day out. It's the same thing. People tend to overthink their position once they're in, either by holding it too long or micromanaging it into oblivion. So the goal here is once you're in and you have a plan, your job is just to relax, breathe into the position, and just like yoga, breathe into it and just let the market tell you when you're wrong. Move your focus from the dome and your order flow um, back to your chart, and then let your chart tell you when your plan is wrong, okay? And then you can predefine that. Anyway, that's a lot of stuff to get into. I simply wanted to cover that, make sure that folks understand how this all fits together. It is Monday after all. Good luck today and take care.